Okay, now you see the worksheet in front of you, and I've resorted it so that the 2500 we saw previously on the balance sheet now appears with the income statement. Okay, let's take a look at the solutions then. I'm going to flip to it right now. You'll see that we had, net income of 12,250, sales of 226, less sales returns, and from there we have to put the rest of it together. Okay, so there's the income statement right there. There's the 226 less the 2500 to derive net sales. Then with a multi-step income statement, we back off the 100,000 of cost of goods sold. That 100,000 comes from right there. And then the rest, we list the various expenses where they need to go. The salaries, the rent, the utilities, the depreciation expense, insurance, and so on. Create a subtotal for all of those expenses. Gets us to income before tax. Then we back off the income tax expense of $81.90, which you see coming right there. Okay, and we're able to produce net income of $12,250. Now, the next statement you prepare is the statement of retained earnings. And this bridges us from the income statement to the balance sheet. So we start off with retained earnings at the beginning of the year, the 21,050, and we have that right here. That's a beginning a year amount, right? Because we're going to add in that 12,250 to it. And we do. We add that there. Did we have any dividends? Well, we had dividends declared of 5,000, and there they appear. Dividends appear as a contra equity account. So we get that amount and drop it in. And we can close both of those off to retained earnings. So retained earnings essentially is the beginning amount plus the net income less the dividends declared, and we see that on this financial statement. Okay, so once we have that done, and I'll switch to the balance sheet, which is everything else, and we need to put it in the right format. Oh, and by the way, I probably should move this here. Having it off to the side is a little irritating, I think. Why don't I just copy it? Oh, and it doesn't want to behave. You know what? I'll leave it alone. We'll just move on. Ignore the formatting issues here. Okay. So we put the current assets together, and we list them in order of decreasing liquidity. So cash and accounts receivable, inventory, office supplies, and rent. Getting these in the wrong order, these two, isn't all that critical in my opinion. We come up with a subtotal of total current assets, and of course we got all of those information, from the debit side of the balance sheet. Now, what you needed to figure out when you work this one is which ones belong in current assets, which ones belong in non-current assets or property, plant, and equipment. You could have called it that as well. And we only had two accounts, the office supplies and the accumulated depreciation. So we see, not office supplies, I meant office equipment. Office equipment of 41,000, and then the contra asset account called accumulated depreciation of $12,000. And that would get us total assets. It is important to realize that this number here does not represent total assets, and this number does not represent total liabilities. It represents debits and credits. And the reason why they don't equal is you have contra accounts like accumulated depreciation, which normally has a credit balance, but we show it in the asset area. Okay, and then we drop in the current liabilities as well. We need to figure out which one of those belong in the current liabilities area. We have all the amounts right from here. We just need to know which ones are current and which ones are long-term. And then we drop in the long-term liabilities or non-current liabilities. Oh, and in this problem, they're telling us the deferred taxes are long-term. I don't know if they stated that in the problem, but I have seen where deferred taxes could be a current liability as well. So I'll have to look in the problem set to determine whether that whether it's unclear as to whether that should be long-term or short-term, or whether it's clear actually. And then from there we put together the common stockholders' equity, and we're dropping in the counts. Now the only difference here is this retained earnings, the 28,300, comes from, well, I thought it was above, it's on this page, comes from the ending retained earnings that we computed right there. Okay, so we computed in this cell which gives us our ending retained earnings. And if we've done everything right, then our assets should equal our liabilities. 1045 equals 1045, and we've solved this problem. I'll take you back to the spreadsheet now, where we get all the sources, and from that we were able to produce the income statement, the statement of retained earnings, and then the balance sheet or statement of financial position. And that is this problem. So thank you, everyone, and I hope you found that beneficial.